So I would say there are two things that are driving transaction activity in financial services in the U.S. One of which is an increasing focus on financial services by traditional private equity firms, as well as consolidation of a lot of fragmented industries in the financial services vertical. So on the first point, there's a number of historically focused financial services private equity firms and a number of new entrants to the space that are coming at it from different angles, being more generalist private equity firms as well as business services focused investors that are now looking at the business services angle of financial services, not so much the balance sheet side. And then from a consolidation perspective, you have the traditional focus on insurance distribution roll-ups as well as asset and wealth management and the RIA space, and those are continuing to occur, and the focus is shifting to other aspects that are more tangential to those markets.
So ESG is probably one of the most important topics in asset management today. It's very critical to the ultimate investors who are largely institutional pension funds, retirement accounts, and sovereign groups who are facing, frankly, not only pressures to make sure they're focused on ESG from their core constituents, but also from an international and supranational basis. So our clients, the asset managers and wealth managers, are incredibly attuned to what is ESG and what does that mean. You have managers who are trying to create indexed funds that have very specific ESG components to it. And I would say that people that are able to really come up with a very clean and concise story about ESG and the ability for the manager to provide value-added services would be incredibly valuable and incredibly scarce in this space. So I would say that relative to other places that Lincoln is very active in, I think that asset and wealth management is a place where ESG is at the forefront, and we are very excited to be real thought leaders in terms of working with our clients in terms of how to implement ESG strategies.
So what's driving transaction activity in Europe in my space? To some extent, it's been a continuation of the themes that we've been seeing for a number of years. So for instance, in the asset management space, it's quite bifurcated between, on the long-only and traditional side, continuing consolidation to achieve volume and scale, and on the other side, in the alternative asset management space, players acquiring niche capabilities. With respect to private markets asset management drivers, the growth in the space is underpinned by a number of factors, including their still relatively small size versus public markets and therefore under allocations from investors, and the fact that this space is relatively untapped from a retail market perspective.
So firstly, on the non-life risk carrier side of the industry, the challenge for the sector from the investor perspective remains how to deliver consistent, attractive growth and returns on capital. The sector is continuing to grow, to sustain improving pricing conditions, and this combined with rising interest rates helps support growth in profitability for the sector. However, these favorable factors are somewhat offset by heightened claim severity and frequency, due among other factors to the impact of inflation, climate change, and Ukraine conflict. As a result, investors tend to look for underwriting businesses with strong track records, high barriers to entry, and also offering superior growth prospects over time. On the life side of the industry, the long-term growth prospects continue to be underpinned by key macro themes such as aging populations, protection and savings gaps, transition from DB pension provision to alternative solutions. The sector also offers value creation opportunities from balance sheet optimization as well as operating efficiencies. On the insurance service side, the trends are similarly underpinned by the same broader themes, but the sector is able to be accessed without the complexity and volatility that balance sheet investing can entail. And this is further supported by consolidation opportunities driven by typically fragmented distribution landscapes, economies of scale opportunities from larger platforms, and attractive financing conditions currently available. So all of these trends make insurance an attractive and interesting space for investors to consider.